You gotta stop trading like a retail trader. You gotta stop thinking like a retail trader. There's a reason that 90% of day traders lose money, and that's because they think like a retail trader. Today during the live stream, I saw multiple people talking about the idea the market was gonna go lower after we pulled back. I thought the exact opposite. I talked about it during the live stream, believing that the market would push up to the highs above 4,000, which it ended up doing. I want to talk about the thought process that I had on Friday, why I believe the market would push up off of the lows and make a move back to the highs, and break down kind of my overall thought process on why I believed that, and how you can rewire your brain so that you're not part of the 90% of day traders that lose money. And a lot of that really comes down to just the overall thought process, right? The overall idea of trading, how the market moves. We're gonna break all that down right here in this video, so make sure you stay tuned. What's going on, retail traders? Yes, I'm talking to you. I'm sure that you're a retail trader if you're watching this video, because I highly doubt that there's many hedge fund traders watching this video or professional traders. So welcome to the channel. If you haven't already hit that subscribe button, you know what to do. Today, I really want to talk about the difference between the thought process on Friday. Why did I believe the market would push up? I saw a lot of people thinking about shorting, thinking about dumping, and I was thinking the exact opposite. So let's dive into the charts here, and let's try to rewire your brain so that you're no longer part of the 90% of day traders that lose money. And you really just got to think differently. Just think differently. Do the opposite of what you normally would do. Well, then you'll end up making money, right? Pulling up the ES 15-minute chart here, you can see the market this morning bounced off the 50 level. We identified this level here at the 60s. Pre-market, before the market even opened, we pulled back, and then we rallied up here to the 91s. We had some great trades on Friday live on YouTube, so if you guys haven't already tuned in, 9:15 a.m., tune in. But we had this nice little push up. We had kind of a, I would say like a triple top, kind of double top at this 90 level, and you can see how the market then rolled off. You know, I saw a lot of people that thought once we pulled back down here to the 60s that we would break below the 60s here and then move down to this level, like down to the 920s. I saw a lot of people thinking that, but there was something about the overall price movement and where we were with the chart, with the pivots, with the VWAP and all these things, that I was kind of leaning a lot more towards the idea that we would find a bottom down here at the 60s again, and then we would rally up, get that double bottom, which is exactly what we got. So we got the kind of W formation here forming. What do we get? We got the double bottom on the 15-minute chart here. So, you know, really you want to focus on these bigger time frames to get a better idea. So if you're wondering, like, why do you keep buying at the wrong time? Why do you keep doing the opposite of what the market does? If you look here at the 3-minute chart, it does look like it's kind of okay. You know, we pushed up here, double top. It's looking like it wants to sell. So if you're sitting here and you're like looking at it and you're like, oh man, this thing's gonna crack. It's gonna crack here at the 60s. It's gotta go lower. It's gonna go lower, right? That's what you're thinking. You're thinking that is gonna happen. But if you look at a couple other things, let's look at a couple other things that's going on here. If we zoom out here, we know that that 60 area from overnight was support. 60 was holding overnight there back on Thursday overnight. And then that 60 held, and then that 60 held here, and that 60 held here in the morning pre-market, and that 60 held at open, that level, that range, that 60 level. So knowing that we already had that touch overnight, kind of a double bottom here, and then going into this kind of triple bottom, are there enough sellers at this level, at that 60 level, to push this market down? You know, when the overall momentum's kind of pushing up, you know, we broke that downtrend, but we're holding, right? We're holding here at that 60 level. Is there enough sellers to push this down? And the way that you're thinking is like, is big money trying to short? Like if I'm a big money guy, am I trying to short here at the 60s? Do I want to be shorting at 60s? The idea of selling, you know, low, buying high, or do I want to be shorting maybe up here at the 90s? Or just in general, if I'm not even shorting, am I trying to add to my position knowing that we have a triple bottom? So if I'm big money and I'm trying to put on, you know, big trade here, I'm trying to get the market to move in my direction, I want the market to move, and I'm a smart trader, do I want to be getting long at the 60s knowing that we have support from multiple touches at that 60 level, or do I want to get short at that level? Well, I think the question is pretty simple, that I would not want to be getting short knowing that we already kind of bounced off this level earlier. We had a lot of volume trade in this area. We pushed off it. We pushed up to those highs again, and then we pulled back. but let's just get rid of those boxes for now, and let's draw the Fibonacci here. From the low on that move at open, the low was down here at the 50s. If we draw the Fibonacci's out here, and we hit the top of this candle, the 91, we got the Fibonacci there. You know, that 786 level, there's a reason that 786 level held. So if I'm trying to get short, I don't want to get short knowing that we're pretty much, you know, at that perfect area for a pullback on the Fibonacci's. Because again, you know, algorithms, big money, smart money is looking to buy this dip. They're looking to buy that 786 dip. You know, they're not looking to sell right here. This is not a sell zone. And that's exactly what they got right there. We pulled back to those lows, kind of put in a little bit of higher low. The low on that candle was 55, so we still didn't touch the lows. Let's just say you're looking at this pullback here and you're wondering like, okay, should I get short? Should I be getting long? Like, what should I be looking for? I should be waiting either way here. I talked about kind of the overall idea of getting back in, but in general, like, I don't want to get short here at the 59s. We don't know what's after that, but in general, all I do is I draw my Fibonacci's. Let's imagine like these candles aren't even here. You know, my Fibonacci's would tell me, based on kind of where they're at there, that a pullback to the 60 level would still be bullish here. So that is very important to think about. That 786 level, pretty much anything in here, that 786 to 0.618, the overall, the algorithms, the computers, the algorithms, the big money, big traders are looking to buy this dip. They're looking to buy that 786 dip. They're not looking to sell. They are not looking to sell. The thing is, like, if this was a short, the market would be basically like the opposite. In the sense, this is where we want to be getting long at. We get that break to the upside. Look at this big candle. We got the boner candle from the 63s right up there to the 74s. This literally happened as I like walked away from the live stream here, and I talked about this move, this exact move happening. So we had that channel kind of down there at the 61s. We're holding. Smart money's buying. You know, smart money's buying. Smart money's buying. Smart money's buying down here at that 60s. They're not selling down here. Smart money is not selling. So if you can't ask yourself, very simple question, like, should I be selling the bottom or should I be buying the bottom? I think a pretty clear answer what you should be doing. Now, obviously the market could have dumped through that 60 level, but again, like, do I want to be shorting right here? I don't want to be shorting right here. Like, there's no reason to get short, especially on the 3-minute candles, multiple times, touching that 60 level, just pushing right back up. We got the push up. So where do I want to get long? You know, again, what do we got? We got the MACD cross. The MACD's bullish down there. We're getting the push up. So I want to be getting long kind of in this area, that 72 to 70 level. I mean, you could pretty much look for that move up here and then get long off of that 70 to 72 level. I mean, there's that little breakout right there on the chart. There's so many, you know, that 72 level is exactly kind of what I told, you know, the live stream I would think would happen. You get the push back over 72, and then we get to push up to 4,000, and that's exactly what we got. Look at this move from the 72s up there to 4,010. I mean, you pretty much had this move here all the way up to the 97s. Small pullback. You want to get long here once again. The MACD kind of getting choppy at that point. I think kind of overall momentum, just too much momentum. But this move right here from the 72s up to 92s, I mean, that's you're killing it. You're literally absolutely killing it at that point. It's 20 points. It's a $3,000 trade on 3 contracts. I mean, you walk away after that. Like, very high probability in the sense that we got, you know, a lot of things going on. Also, if you look here on the 15-minute chart, we got above that 72 being the VWAP. Where is that VWAP at? I'm always talking about during the live stream, like, we got to focus on where the VWAP is. We get above the VWAP. What do we get? We get a push up. We got pushed above the VWAP, and then we rallied all the way there to 4,000. So on the 15-minute chart, a little bit of a push up there, a little bit better on the 3-minute, but again, you know, we got the VWAP, we got the MACD, we got the overall idea of buying low, selling high. Like, sellers do not want to sell at support. They just don't. Like, if you're a big short, you don't want to be shorting at a support level. You want to be shorting at a resistance level. So if you're doing the opposite, like if you got short on this move, pretty much like if you got short at any point today, like, sure, you made some money from here to here, but in general, like, it's just the risk reward's not there. You know, the choppy action, like, did you get a big move? I'm not trying to fight the trend. If the overall trend, the overall flow of the market is pushing in a certain way, I'm not going to stand in front of it. I'm not going to try to fight it. I'm going to wait to, like, get that good opportunity to get into the flow. You know, I want to be jumping into the market flow when it's there and the opportunity's there. So I'm looking, you know, constantly to, like, okay, just being patient. I told people in the live stream, like, this is pretty much just a setup where you're just sitting here patient. Let's just sit here patient. Let's get that breakout back above the 72s, and then we can look to get long. You could have also kind of jumped in here, maybe a little riskier off the 62s if you wanted to, but I think, you know, the overall kind of better risk to reward in terms of the setup and the probability that this thing would break out would be basically waiting for that break over 72, and then you're risking, you know, I mean, 69 with the low on that candle right there is 68.25. So, you know, you could have bought here 72, waited for maybe a little bit of a pullback there if you wanted to, but in general, I mean, that's it right there. I mean, you're risking 72, risking 5 handles maybe for 20 handle profit to the upside. I mean, on this move, like, where's your target at? Your target's obviously going to be pushing up here above the high at this point. I mean, we went ding 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 up to the high, pulled back, and it's funny because look, like, we had this trend here, you know, we broke the downside. So a lot of people, a lot of amateurs are thinking, okay, you know, we're going lower because of that move breaking the downside. Like, we broke this trend, and all the amateurs are like, okay, I'm going to short down here now because we're going down to the 50s. Like, that's what I saw people talking about in the live stream. So I know that's the thought process for a lot of people, is when we broke this trend, they're thinking, okay, it's time to get short down here. No, 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 my friends. It's time to just look for that next opportunity when we push back up, or just wait for the break to the downside. Because once that move actually happens, it's going to be much easier to trade it and much easier to hold for your profit, hold for your targets. And the problem is, like I said, if you're shorting in this area, you know, you get some of these rips back, you might get stopped out anyway. So I think today was just a day where you just sit back and you wait for that perfect long opportunity, and then you get long and you get that nice move up. I mean, we had some nice little spikes up later in the day from like this 97s up there to the 08s. Some action there, but I mean, really, that was the move over 72. Over 72 up there to 4,000 was the move of the day, I would say. The big thing to remind yourself, what do you need to focus on? Number one, are we at the bottom? Like, if I'm a seller, do I want to be selling at this level? If you're not thinking that it's a good area to be selling, well, then it's probably not a good area to be selling. So don't be shorting into these levels. If we're at a previous area of support and we haven't broken through there, we're making kind of a higher low. Even if it's just very small higher low, it's still a higher low. Like, we're still holding support. So again, there's no reason to short. You really got to ask yourself just a simple question. Is the momentum telling you that this is a short? Is momentum telling you this is just a pullback? Look at the Fibonacci's. Use the tools that we talk about on the stream all the time. Focus on these key levels. Don't go fighting the trend. Don't fight the flow of the market. The market is going to show you the opportunities, but you have to be patient. You have to wait for those opportunities. So if you ended up losing money on Friday because you were shorting at the bottom and then you got stopped out, and then maybe you try to short at the top again, you got stopped out, you lost money, or you just kind of held on to a loser, or you try to buy the top, things like that, like, you got to ask yourself, you know, looking back at the chart now, what could you have done differently? Should you have been buying at the support, selling at resistance, and kind of flipping? You know, the big issue for a lot of day traders is they do the exact opposite of what you're supposed to do. They're shorting at support and they're trying to get long at resistance. Just do the opposite of those two things. And while I can't promise you that you'll make money, but you should have better results than what you're having doing the opposite of that by shorting at the bottom and buying at the top. That's never a good idea, never a good plan. Stop trading like a retail trader. Stop just instantly seeing something happen and being like, okay, I gotta get short. No, zoom out, look at the big picture, focus on these setups, focus on the action. Where is the flow? What is the flow telling us?